All right, guys. So, this video is, or the reason that I'm creating this video is, now I'll do one in terms of London as well, right? But let's think about if we were like trading without a bias, all right? And if you're trading without a bias, that means that you should have some type of key characteristics or key factors that you look for instantly and immediately know if this is a trade day or a risk off day. All right. Meaning that when you arrive to that session, you should know automatically if I'm putting on risk or if I'm not putting on risk. All right. And you're going to answer that question once again by the characteristics. All right. So right here, we're only going to speak about the New York session. All right. New York kill zone. All right, and we're gonna look at these examples from 7. It's gonna be shaded from 7 until 11. All right. Um, I'm not gonna go into entries or anything like that, right? I know I have 7 to 10 here, but we'll put 7 to 11. All right. Now, so what I mean is waking up and seeing this as opposed to seeing this. All right. And what is this? Right. So the A plus, if I were to give you A plus in terms of New York session, just refining this whole thing and simplifying it. Now it's time for everyone to just, especially in this elite group, right? Now this is where you dummy it down. All right. You keep it simple. Okay. I know that we're all rocket scientists at this point, but we don't want to be rocket scientists no more. All right. The goal is to make money, keep it simple, and like do the easiest thing every single day. So that A plus New York scenario, expansion from London, of course, right? But the main key is seeing that both sides of Asia have been cleared. So when we talk about anticipatory skills, waking up and knowing exactly if this is a trading day, right? That is a feeling that brings comfort. All right. That is simply seeing both sides of Asia taken out. Think about what we speak about when we're talking about that efficiently traded price range, right? And we're saying, hey, this range of price is efficient. Price ran this way, then it ran this way. All that means for us is that that's the true direction, right? This second direction is the true direction. So when we're thinking about the New York session, we can expect continuations. All right. Now, going back here, let's move this out of the way. All right. Going back here, clears both sides of Asia, right? The next key point is New York. New York Open, at 7 o'clock, the kill zone open, needs to occur outside of the Asian range. Okay. So this scenario here, right? I wake up and let's say we're not even speaking about 1 and 3 and 5 to 7. All right. I wake up instantly, I see Asian range. We taking the high, we taking the low, right? Check. This is a trade day. Okay. Now, the other scenario to that is, let's say, let me give you guys right here, right? So let's say we have this day, and this is what I mean by New York kill zone has to open outside of that Asian range. You might have a day where the high is taken, the low is taken, right? However, this blue line is going to mark out the New York open kill zone, by the way, right? However, you arrive to here and New York open kill zone is happening literally right inside of the Asian range. On these days like this lowers the probability of that true continuation, right? This breeds more randomness than anything. All right. So this day here, we go ahead and draw an X on this day. All right. Now and that doesn't mean there aren't contingencies or discretionary pieces that we can add. However, what I'm trying to do is show you guys what I mean when I'm saying simplicity, right? No, there is no discretion. It's literally this or that, right? And that's it. Okay. And in this case, it's this, right? No discretion. It's this or nothing. Okay. So now something else that's key is you guys know how we speak about the open draw, right? Okay. Now, if let's say this is that previous day's low, prices run out that previous day's low, all right, and you're looking at New York session, and you know that all right, we have lower levels to attack, just like today, right? Today is Wednesday, November 1st. We wanted to price ran out a previous day's low. However, it ran also to that 0521 or 22 level. Okay. Um, the reason being is because if New York, all right, if you're in the New York session, perfect day, we attack Asia high, Asia low, right? And you're expecting an additional run, all right? If that draw has been met, what you refer to is the ADR, okay? So if the draw has been met, however, price still has room to work in terms of that ADR. ADR is right here, right? Then in that case, you can still take that trade, that OTE trade in New York session. All right. And also given order flow and things of that sort. Okay. All right. So like literally this little bunch right here is key. Like this is you can put this on a note card and stick it in your wallet. This is your business model. Okay. All right. And then from there, the steps are just we go through PDA rate matrix, 15, 1H, 4 hour daily, right? CME open. All right. We can keep it. That's not a deal breaker. We keep an eye on it. Of course, we want to know a high impact news, and then we move to the entry model, right? We keep it literally that simple. You can literally print this out, put this on a piece of paper. This is New York. If you're trading New York, this is it. All right. Now, I'm not speaking about stage two. I'm speaking about just simply coming and trading that stage one. All right. Some months you may get 5 scenarios. Some months you may get 3 scenarios, right? You may get 2, 1, none, right? But then some months you may get 8, like October. There's 8 scenarios in October. All right. Those 8 in October could basically supplement for, maybe that 1 or 2 opportunities that you got in August. All right. This is trading. This is what happens. All right. And this is without speaking about stage 2. All right. Something else that I want to kind of mention before we get into examples is right here. Uh, right here. So you guys know how we speak about OTE, right? We want to take OTE. We're looking at that expansion from the Asian range, right? This is that Asian range. We've taken both sides. Here's midnight open, and we have an expansion, and we're coming to the New York session, and we're looking at the overall range. So I got this yellow line here at the top, and then this yellow line, this yellow circle at the bottom, right? The overall premium and discount or equilibrium is here, right? This would be our equilibrium, all right? Now, obviously, this retracement is not making it to that equilibrium, all right? So what's the point that I'm trying to make? What you can do if you have order flow, 15-minute, you start. This is 15-minute and up. If you have swing points on a 15-minute chart, right? And also this may be like a lower time frame delivery, and that 15-minute candle takes out short-term highs and expands lower. That's a swing high. All right. You can take the range high to low and expect OTE from here to here, right? You can play that OTE scenario. All right. And then should be an example or two once we go through these examples from the month of October. All right. So just keep those few things in mind. Now let's take it to the chart. Right. We'll go through the entire October. All right. So looking at today, also one more thing, this point here. All right. So going back, you guys know how I'm saying, hey, Asia high and low needs to be taken. All right. Now, let's say you come into a day where you know for a fact price is going to expand lower, right? It needs to expand lower. The draw of liquidity is lower. Higher time frame order flow is bearish. All right. Well, if you get a day where you get just going to try to draw this really quick. If you get a day where you don't get a sweep of Asia high or low, but you're seeing that order flow, and then you arrive to that New York open kill zone, just look for the SMT, right? Because today technically EU didn't run out Asia high or low, right? However, GU did, right? So we have SMT. So the SMT uh basically clears the need for that sweep of the Asia high on that particular day where price doesn't really take it out. However, you're expecting more bearish prices. All right. And then we saw that today. So right here today, obviously OTE. So this is November. Let's look at October. All right. So we have one in November so far. All right. This is obviously stage 2 from yesterday. All right. But this here, and we're not looking at entries. We're simply just going through those anticipatory skills to look at Asia session as soon as we wake up, and then locating 7 a.m. opening price and seeing if 7 a.m. Occurs outside of the Asian range, right? So right here, here's Asia, right? Purple box. And we see Asia low is clear, Asia high is clear. Right away, we know high chance for OTE day. All right. So that's 1 for October. All right. Right here, this is a day. And I'm at some point, I'm going to talk about the contingency of this. All right. Because they're technically the Asia high and low is taken, right? And then you get a little OTE play right here. All right. But the focus of this video is not on that. We're talking about simplicity. So right here, Asia high is taken. Low seems to be taken. However, guess what? We're opening right here inside of the Asian range. Scratch. All right. We don't trade that day. All right. Right here. Okay. Right. Like basically what I'm showing you guys is you're setting yourself up for randomness if you don't see this. All right. Right here, randomness. Right. And obviously nothing is random, but still, right. It's not the most consistent outcome. All right. We're not taking the Asian high and low right here. So scratch. Not a trade day. All right. Come to this day. All right. This is nice. Okay. Well, we can see instantly we wake up, Asia high is taken, Asia low is taken. We have that expansion. We're just simply waiting on OTE. All right. So we'll go back, we'll look at our PD arrays, right? This gives us that OTE and market reversal, right? Or continuation. That's 2 for October so far. All right. Right here, let's actually talk about this. And I think this is last Tuesday. Yeah. All right. So we'll go to a 15-minute chart on this. Right. Obviously, right here, the draw, right? Price should be attacking these equal lows here. That's pretty obvious. We attack Asia high, we attack Asia low, and then we'll arrive to the New York session. All right. And let's look at a 1-hour chart. Right. So this is nice. All right. So we have that 1 hour inefficiency. All right. And then let's go to a 15-minute chart. Okay. Now, I know I mentioned swing highs, swing lows. This is where you guys will kind of make your own or whatever you're comfortable with. Or maybe you say, hey, I'm just not going to engage if it doesn't pull back to a full OTE. However, 15-minute order flow, right? Even if I look at this, right, it doesn't come all the way to OTE, but we also have this high created on that 15-minute candle. All right. You can take this level down here to this level here, right? And maybe you formulate something from there. Right? I'm just giving you guys insights in terms of realizing that 15-minute order flow will usually hold up. Now, if you have a 1 hour imbalance and then above a 15-minute like order flow or something like that, then obviously, and then you have news to come out, you don't want to, just like today, you wouldn't want to really take that 15-minute because that news may push us into that 1 hour scenario. All right. So we can scratch this one. We'll just leave it at 2 for New York so far, or for October. Now this is the day right here. We come into we arrive at the New York session. Asia high and low is taken, right? And then here we are. New York opens, kill zone 7 a.m. is occurring outside of that Asian range. So that's 3 for the New York session. All right. Here's another one. Asia low, Asia high is taken. New York is opening here, right? Now, as close of a call as this is, right? I'm not saying I would trade this, but it stays inside of the range and it gives us an expansion. All right. But either way, we shouldn't be scared of this. All right. because obviously we'd be looking at that array, right? And we'd be looking for a certain delivery here. All right. So nobody's just jumping into that trade. Right. However, it does give us an expansion and continuation outside of the range. All right. But we'll scratch this day, right? We'll say that's 3 perfect scenarios for New York so far for October. Right. Uh right here, Asia low, right? Asia high is taken, right? We arrive at New York, so this is good. However, we just don't get a pullback, right? But the stage is set. So when I wake up, I immediately know, all right, this is the day that I want to trade. All right. This day right here, right? Asia high, Asia low, New York opening outside of that range, provides room for OTE. There we go. All right. Let's look at the next day. Same idea here. All right. Now the difference with, not difference, but the only thing with this is, once again, we're opening inside that range, and you get that bit of randomness, right? We push up, right? We push down strongly. You might see this as a breaker at that point, right? Maybe even though it expands, right? It's fine if you scratch that day. Okay. This day here, obviously, you can see randomness, right? Nothing's clear. But we come to Friday of the previous week, Asia high, Asia low, opening outside, makes room to trade back inside, expansion. Perfect. All right. So far, that's 1. Right, we're scratching that day. 2. All right. Nothing happened on this day. 3. Right. So far, that's 3. 3 plus the one we had this current week. So that's really 4 for New York for October so far. All right. We can look at this day here. Now, this is a news day, so we wouldn't really scratch that. We wouldn't really trade this, right? But even still, right? Asia high, Asia low is taken. We're opening outside, OTE, and then expansion. All right, you can look at these days here. New York is opening inside of the Asian range, right? Scratch it, right? Randomness. It's not even worth paying attention to at that point. All right. Now look at this day, clear comparison. Right, and this is what I mean by ADR. So let's see what the ADR is on this day, because we've obviously we've taken out buy side liquidity. However, ADR says we still got a little more room to run. All right. Biggest point here, Asia low, Asia high. Immediately when I wake up, hey, this is a trading day. All right. New York open is here. Kill zone starts here. All right. We trade back inside of that range, entry model, and then expansion. All right. This day here, no sweep of Asia high and low, right? It becomes less clear, less obvious. All right. Here's another scenario right here. Now this is news. So Asia low, Asia high. All right, we come here, 7 a.m. A little bit of expansion, and then right, news steps in and clears the whole thing out. All right. This day here, we arrive at New York. Asia high and low are not taken. Scratch it, right? And we get to Wednesday, right? Pretty decent day. Asia high, Asia low, both guys are taken. All right. We're coming back inside right here. Maybe you take that trade. Maybe you take that trade. Either way, it's OTE. All right. I believe on the 1 minute chart, this still gives you about a 1 to 2.5 or 1 to 3, I believe. All right. October 3rd, right? Guess what? We're not trading that day. Look at where New York is open. So right away, so look at where it's opening and look at what you get for the rest of the day. All right. Let's go here. All right, this day here, Asia high and low are taken. We just price was just in a rush right here. All right, nothing you can do about that. All right, and then this is September, but you guys can see just looking at these 2 images here, and we'll stop right here. You can see Asia high and low, sweep, New York OTE expansion. Asia high and low, sweep, New York OTE expansion. Right, and then you can see the market maker model created there also. Right, the OTE from this day was distribution. OTE from this day was reaccumulation. All right, so I just wanted to make this video, guys. There was no bias involved. There was no nothing. That was simply just us looking at price action and having that anticipatory skill, knowing that our most probable trading day is the classic buy or sell day. And how do we know if we're going to potentially get a highly probable buy or sell day, right? It starts with us seeing a sweep of Asia high, Asia low, right? And then New York opening outside of the Asian range. So New York opens here and then boom, all right? Trading without a bias, New York session.